I'm about to pull back the curtain on the mortgage broking industry, and I'm saying this as someone who's been a broker for years and was recently named the Advisor's 2024 New Broker of the Year. Now, if you've ever worked with a mortgage broker and felt like they disappeared the moment your loan settled, or if you're thinking about using a broker but you're just not really sure what to expect, then this video is for you. I've helped my clients secure over 200 million in home loans, and I've worked alongside brokers who have been in the industry for 30 plus years. To be perfectly honest, I've seen the good, the bad, and the downright lazy, and I think it's about time someone was honest about what really goes on behind the scenes. What I'm going to share with you today isn't designed to scare you away from using brokers. Quite the opposite. I actually want to show you exactly how the industry works, how we get paid, and most importantly, how do you find a broker who will actually have your back for the long haul. So let's start off with how do mortgage brokers actually get paid? Because once you understand this, a lot of things will start to make sense. Now, there are actually two components to a broker's compensation. The first is what's called an upfront commission. So for example, let's say you buy a house and we set up a $500,000 loan. We actually get paid a percentage of that loan amount upfront by the bank. But we also get paid what's called a trailing commission. And this is an ongoing payment based on your loan balance, and it continues for the life of your loan. Now, here's the important bit. Pretty much all lenders pay the same commission rates. So there's actually not really a financial incentive for a broker to recommend one bank over another just because they get paid more. And to be honest, if they did that, that'd actually be in breach of their compliance requirements. But where it gets really interesting is with the trailing commission. Because the way I've always seen it is that the bank doesn't just give us this money as a free kick, but they're actually paying us to continue to service your needs as a client moving forward. Yet here's what I see happening all the time in the industry. I call it lazy broking, and it's everywhere. Here's how it typically works. Client gets referred to a broker does their job, gets a loan approved, everyone's happy. Loan settles, commissions get paid, and then nothing. Maybe, if you're lucky, you might get an automated birthday email. But generally speaking, the client doesn't hear from their broker again until one of two things happens. Either it's 2 years later and the broker wants to refinance them to earn another upfront commission, or the broker finds out that the client has sold their property and refinanced with someone else, and suddenly they're going,
"Hey, what happened? How come you didn't come back to me?"
I see this firsthand every day with current and ex-colleagues. And even more scary, I see this exact story from clients who have been referred on to me. And in our initial chats, they're quite honest and they say, "Hey, Chris, we actually have another broker, but we haven't heard from them and we can't seem to contact them either." And that's the problem. Too many brokers treat their clients like a one-off transaction and they bank the trailing commission like free money instead of what it's actually designed as, which is a payment for ongoing service. So what should you actually expect from a good broker? Let me tell you how I help my clients moving forward and what you should be looking for. The first is 6-month check-ins. Now, I reach out to every client 6 months after their loan settles, not to try and sell them anything, just to see how they're going and if they have any questions and to make sure that their loan facility is continuing to do what they want it to do. The second is annual pricing reviews. Every 12 months, I run a pricing review with my client's existing bank. I'm not trying to refinance them. All I'm looking to do is to make sure that their existing lender are still offering them the best available rate in the market. If I can get them a better rate without the hassle of having to change banks, that's a win for everyone. And it also helps to keep their existing bank honest. The third is equity updates, and this is a massive one. I regularly run property valuations for my clients to show them what their currently equity position is. Why is that? Not everyone aspires to have a 10 property portfolio, and that's completely fine. But the question is, what if you didn't even know you were in a position to buy a second property? So a recent example is that I had a client who bought their first home in Perth for $500,000. 12 months later, I ran a valuation and it was worth $600,000. To be honest, they had no idea they had built up that much equity in such a short space of time. On the back of that conversation, we ended up helping them buy their first investment property just because they understood where their equity position was. The fourth is proactive communication. I don't wait for my clients to call me. I reach out to them. I keep an eye on interest rate movements, policy changes, and anything that might affect them. Most brokers will tell you, "Oh yeah, you can call me anytime." But that's not the point. It's not about being available when you need them. It's about being proactive about your financial well-being. So how do you spot a broker who's going to disappear after settlement? Well, here's a couple of red flags to be aware of. The first is that they can't explain their ongoing service offering. If you ask any broker what they do for a client after settlement, and if they give you vague answers like, "Oh, you can call me anytime," or "I'll be in touch," that's not good enough. A good broker should be able to tell you specifically what ongoing services they provide and how often. The second is that they only talk about interest rates. If all they're focused on is getting you the lowest rate, that's a straight up red flag. Yes, don't get me wrong, interest rates matter, but a good broker should be talking about your long-term financial goals, not just the cheapest loan option. The other red flag is that they try and push refinancing too aggressively. Be wary of brokers who are constantly trying to refinance you. Sometimes refinancing absolutely makes sense, but if they're pushing it every 2 years, they might be more interested in just earning another upfront commission rather than servicing your best needs and interests. The next is that they don't ask about your future plans. A good broker should be asking about your long-term goals. Are you looking to buy an investment property, perhaps upgrade the family home, or maybe start a family? These are all things that impact your borrowing strategy. And a broker who doesn't ask these isn't thinking long-term. Now, I know this might sound like a really weird comparison, but I've always thought of finding a good mortgage broker a little bit like finding the right hairdresser for you. When you find the right hairdresser, you stick with them, right? They know exactly what you want, they understand your hair, and you know you're going to get a good result every single time. You don't just go to whoever's cheapest or most convenient. The same principle applies to mortgage brokers. Yes, most of us can probably get you a similar interest rate with a similar bank. But the real value is in actually finding someone who understands your financial situation, knows the bank policies inside and out, and who you can actually build a relationship with over an entire lifetime. Because here's the thing, your mortgage isn't a one and done transaction. For most people, it's actually a 20 to 30 year relationship. You want someone in your corner who's going to be there for the long haul, not just until the next commission gets paid. Like I said at the start of the video, I'm not trying to scare you away from using mortgage brokers. Quite the opposite. A good broker is one of the most valuable members of your financial team. Think about it like this. If you're self-employed, there's no way you're navigating all the different lending policies on your own. If you want to build a property portfolio, you need someone who understands structuring and the tax implications of your loan facilities itself. If you're a first home buyer, you need someone who can guide you through the process without overwhelming you for your first time and first experience. But here's what I want you to understand. You're not just choosing someone to get you a loan. You're choosing someone to be part of your financial journey for potentially decades. And the broker who takes the time to understand your goals, who checks in regularly, who proactively looks for ways to improve your situation, that person can help you build some serious wealth over time. The broker who disappears after settlement is just a transaction facilitator. And to be honest, you deserve better than that. So here's my challenge to you. If you're thinking about using a mortgage broker, don't just go with whoever was referred to you or whoever promises the lowest rate. Ask them about their ongoing service. Ask them about how often they'll be in touch. Ask them what they'll do once your loan is settled. And if you already have a broker who's gone quiet since your loan settled, maybe it's time to have a conversation with them about what ongoing service looks like. At the end of the day, your mortgage is probably your biggest financial commitment. You want someone in your corner who treats it with the respect it deserves. So if you're looking for a broker who actually gives a damn about your long-term success, I'd love to help. You can find my details in the description below. Thanks for watching, and I'll see you in the next one.